My guest today has built a £21 million annual revenue business. He's in the automotive sector. The business is finally profitable, but he wants to go to the next level. He needs big money. I'm talking millions and millions of pounds. Where's he going to get that money to turn this into a £100 million business? Well, it's all coming up in the show. Take a listen. Welcome back, campers, to the business broadcast. Now, for me and for JB, it's been a reprieve, but not for our listeners, because
that's it.
I've been away. I've been in China.
I've been watching your stories of you being in China.
Yeah.
You looked exhausted. I felt exhausted just watching.
Yeah, because
I like the 36-hour day. When you were so delirious, you were like, "I've come to the wrong hotel. They booked me into the wrong place." Oh, well, we'll go somewhere else. I was thinking, he's livid.
Like the never-ending journey. We got there and like, no, wrong hotel. I was like, no. It's by then, I wasn't angry about the 36-hour day at all, because so much went wrong that you just go, well.
Oh, well.
I mean, I was hoping Jeremy Beadle or Anton Deck were going to walk around the corner any morning and go, gotcha.
Surprise.
You're Neil Edmonds, if anyone remembers those.
Wow, showing your age there.
Old school days.
Jeremy Beadle.
Yeah, Jeremy Beadle. What was Anton Deck done a similar thing of that, didn't they, on their...
They did.
But they did it to celebrities rather than normal people.
They've done... Yeah, which camp would you fall into? You're probably a celebrity these days, aren't you? Around Essex way.
No. I got recognised in China.
Did you?
I promise you. Like, I got taken out for dinner in Guangzou, which is a city in China.
Oh, they do lovely dinner in Guangzou. I've heard it.
Guangzou.
Yeah, exactly.
In Guangdong province. And some said, follow you on YouTube. I own the British Chamber of Commerce type thing in China.
Really?
So they took me out for dinner, all the team, yeah. And then when I was there, these two South Africans come up and went, I can't do a South African accent, so I'm not going to do it.
Give it a go.
No, because it just comes out German Australian, which is terrible.
Hey, South African accents, though.
When I started, I was about to do
These Irish guys.
No.
What about the Irish guys?
Yeah. They went, no, I can't believe you're here, James Sinclair. Like, we're massive fans of you. It's really weird.
Really?
Yeah,
Did
really
this actually
weird.
happen? Is there any evidence?
Yeah, because Matt Davis, who works for me, he was there.
I want it verified.
And our team in China were there. So yeah, that's the power of personal brand.
There you go, power of content. Free dinner in Guangzhou,
yeah.
Exactly.
Which is just above Hong Kong, if you're interested.
I wasn't, but thank you.
It's a tier 1 city, 20 million people live there. Do you know what's
What
made
does tier 1 city mean?
Well, in China, they tier the cities.
Okay.
So they got like 4 or 5 tier cities: Beijing, Shanghai, Guangzou. I'm sure you've heard of Beijing and Shanghai.
Yeah, those two.
Like Shanghai Nights.
Yeah.
Great film. Jackie Chan.
Yeah, very good film.
Beijing Olympics, and capital. But what amazes me about China, and I've been there a lot now, is you've got these cities with 20 million people, which is more than double the size of London.
Yeah.
For context. 9 million people live in London. So 20 million people in Guangzhou, and you'd never heard of it.
No.
And you can't even pronounce it properly.
No.
And nor can I until I've had many, many practices. And it is such a behemoth size of a country.
So we were chatting about this before we started. Explain to people how the city structure there works. So there's certain regions and areas, and they will just manufacture
that's right,
one thing.
But I think it's more of a rule of thumb, not that's the absolute rule. There's no law that says you can only make TVs and technology in Shenzhen, where most of that stuff is made in Shenzhen.
But they do tend to all cluster together in the same sector.
Yeah, I mean, and because I think if you know, there would be people that have had a divorce, or the most entrepreneurial people of that company have then gone on to start, like Silicon Valley, like Silicon Valley's that, isn't it? And Media City for the BBC, and those people then, and it's all carved off,
spreads out from there.
Yeah, but then the government do sort of say, we want this to be. So if you wanted to buy furniture, you would go to Foshan, which is another city. Small commodities, EU.
And how vast are these places?
Vast. Vast.
So
There's a billion people. I mean, can you...
Is it really?
It's 1 billion people live in China.
Wow.
I mean, they're just vast. What annoys me, and I'm doing a weekly email now.
I've seen that.
Yeah, called the James Sinclair Letter, which is free to subscribe to on my website.
Click the link in the show notes now. You'll enjoy yourself.
Value it is, JB.
Just
like this
chucking
podcast.
value at your face.
And
it's actually very good. I messaged you yesterday. I really liked it.
Yeah, you did, yeah. And I penned a letter about China and what they do to
Bloody
support.
hell. Have you gone back in time? He penned a letter.
Yeah.
He took his quill to China
Yeah, about how they support business and entrepreneurship,
Yes.
and how within just 3 or 4 short decades they become the second biggest economy in the world. And I just wish we did that more in the UK.
So one of the things that really stood out was that if you decide you want to go to a trade show, the government will pay 40% of your costs.
In certain areas. So the EU, which is spelled YIWU, which is where our office is in China.
What area is that famous for then?
Small commodities.
Okay.
So if you were buying nuts and bolts, small toys,
Okay.
small commodity stuff,
Yeah.
like drinking cups, that sort of stuff.
EU's the place for you.
EU's the place for you. And they make lots of things, but they want to grow the local economy in EU. So the local government will say, all right, do you want to go to the Hong Kong Toy Fair and show your wares in Hong Kong? We'll pay 40% of the cost of your stand. You ain't getting that stuff over here in the UK. Equally, we are making a lot of stuff in a city or a region called Jihan, which is where the Terracotta Army is. Again, you probably never heard of it. Massive city, I'm guessing 12 million people plus. Beautiful city, actually. There is the right north of the country, just underneath Mongolia, and they want to get the cities outside of Jihan. We're talking 2 hours away from Jihan, which would be considered quite close,
Right, okay, yeah.
because of the size of the country. They want to get the people into jobs and employment there. So the government will say, well, look, you set up a factory over there. We'll pay the electric. We'll pay the rent. We'll help you. We'll help you. We'll help you. Just grow and employ people and grow the economy. We don't do any of that stuff. Mainly because I think people go, well, why are you benefiting business owners? Why are you giving them tax breaks, and all of that stuff? But
So why do they do it there and we don't do it here?
well,
Obviously, it's still
without getting political, which I
softly
always
communist
say,
state, so the money funnels back into the state, I guess.
Yeah. Well, the big problem is, what's the difference between private enterprise and government? Well, private enterprise usually has longevity to it. So if I'm running Marsh Farm, one of my businesses, or Rossi Ice Cream, I go, well, in 10 years' time, this is where we'll be, and we'll be working towards that 10-year goal. Government never have the benefit of that because they're only around for 4 or 5 years. And if you look at the UK, in the last 6 years, I think we've had 5 prime ministers. So there is, that is not a joke, and we're not getting political about it, but that is just fact. The longevity game doesn't happen, and everyone's looking for short-term solutions. We'll go over to China, President Xi, and we're not getting political here, and I really mean this. He's been around for a long time.
And he'll stay there as long as he likes.
And he'll stay there as long as he likes. He just change, And if we now, let's go out of China, because I feel like we're getting political and I don't want to do that. We go to Dubai and see what they've done in 3 decades. Like our lifetime, the years that we've been on the planet, compared to the life cycle of London, for example. What's really happened to London in our lifetime? We've had Canary Wharf. We've had the Walkie-Talkie Tower. We can name them, can't we? We've had the
Wibbly Wobbly Bridge.
We've had we've had the Millennium Dome. Like Dubai, you can't list it. Like just let's go because
they built an economy in 3 decades, and we built a bridge. Really.
And they've done tax breaks, incentives, get talent, get entrepreneurship, diversify economies, and they've, because of continuation of leadership. Now, whether both of these dictatorial economies, which doesn't actually sit well with me. I don't agree with that. I like democracy, but I'm just saying I think that's the reason why they've got ahead, because someone's in charge.
And you had a podcast
for a long period of time
with Dodge Woodall. And you were talking a lot about the UK economy. And it seems like the UK, because Dodge is someone who's looking at other places, isn't he? And he's looking at what's happening here, and we're almost draining the entrepreneurial spirit out of this country because we decentivize people. We almost want to, and it's not even tall poppy syndrome. It's not even like, well, the likes of a James Sinclair with 30 million quid turnover and 1,200 staff, you should be bloody applauded for it, because 1,200 people pay their rent, pay their mortgage, and pay for their life because of the risks that you've taken. But you're not incentivized. It's decentivized, isn't it here?
And red tape. And
do you think
it's also, do you know the other thing as well? Like the infrastructure that these countries put in place, like if they see a problem, like in Dubai, they're doing this thing now. So taxis are really cheap in Dubai. So my brother-in-law works there. And there's 100 people in his office block, whatever it is. I'm making the numbers up. They get 100 taxis in, right? But that is the only option because there is no subway, London Underground,
Right, yeah.
So everyone gets taxis in. So, 1 million people going into the city, that's 1 million cars.
Yeah.
So what we've done in the UK is very slowly built the Elizabeth line and very slowly added on other underground stations and we're very slow at it. Well, the Dubai royal family have gone, this is a problem. So they're now just building monorails and they're just getting it done.
In 5 years it'll be...
Well, no, within 24 months,
Really?
There'll be monorails fully, taking thousands of people in and out.
Yeah.
We can't even get HS2 over the line because the tyranny of the minority going, well, I don't want my house moved. And I get that we're good, nice, decent human beings and we have to be fair and reasonable to everyone, but it slows the process down because everyone's got a bloody opinion, which is also part of me goes, well, that's right. I want everyone to have an opinion, but then nothing gets done.
Yeah. So when you've been on a trip like that for like 10 days or whatever, and then you fly back in and you've seen the green grass of home as you're coming back into Heathrow, do you sort of get a bit misty-eyed? Go, this could be brilliant. We were an island, not again getting political, but at one point we controlled 80% of the planet because we just got stuff done.
Yeah.
And now it's almost like there's so much nitpicking, bickering that goes on. You just get nothing done.
We are the greatest missed opportunity, I believe, in the world now. People trust us. We're an English-speaking country. We've got a great legal system, great financial services system.
Great heritage, history, longevity.
We're very good at things. We've got great, talented brains, brilliant education. They're some of the best universities in the world. And we're not using our skill sets and assets, and it really, really gets me down.
Again, not getting political, but at the time of recording, we've just gone through the local elections.
Yeah. And
it looks very much like there's going to be a different colour flag waving above Downing Street come the end of the year. Will that make the blindest bit of difference?
It's not that we're doing political stuff here, but my view is we'll have a hung parliament. I don't think anyone's going to have a majority unless I'm hugely wrong. So what does that mean for UK business owners? It means, again, you're your own economy because nothing will get done for 5 years. So it might be, Labour are in charge, but they won't have a strong majority, so they won't be able to get anything done.
Yeah.
So we're going to have 5 years of stagnation.
And do you think that's how business owners have to think? Like, you are your own economy. Don't rely on anything else. Rely on yourself. Build the economy within the constraints that you've got and just bloody get on with it.
Yeah.
James Sinclair for Prime Minister, that's what I say. Would you ever run for local office?
Why is everyone asking me this?
Because you should, because someone with bloody common sense should get involved.
Because nothing will get done, will it?
What about if we start our own
party? If I'm not
party?
making the decisions, there's too many layers of decision making to get anything done. And that's why I would never do it.
So you're only willing if the country becomes a dictatorship and you're dictating, then you'll have a go.
Yeah, if I felt like I would make a difference, I would consider it, but I don't think I can make a difference.
What about if...
Because I've met so many great MPs, both red, blue, yellow, Liberals, Conservatives, Labour, really hard-working individuals.
Just can't get nothing done.
They can't get nothing done. I've met lots of them. Very fortunate in my position to meet local government, high government. I've met Chancellors of the Exchequer, the lot. Can't get anything done.
No.
I've literally had a conversation with George Osborne, former Chancellor of the Exchequer, about VAT and business rates. And whatever their political will is, they can't get anything done.
Yeah.
And the last person that did try and get something done, they got rid of her within 6 weeks. Not to get political, but she did actually try and make some moves that were, whoa, this is too much. The markets don't like it.
Made a laughing stock,
yeah.
Sold 2,000 books. As I heard on the podcast the other day. She released an autobiography and only sold 2,500 books.
Oh, God. Yeah.
But the powers that be don't like that big shift in change, do they?
No.
Not to get too political, but that is dictatorships, communist countries that Theresa May all covered. Fantastic. And everybody else in between. Should we talk about vans?
Yeah.
Nice segue.
So when I was coaching and consulting back in the day, Leo Dack, who is our guest today, was one of my clients. Very impressive entrepreneur, very lovely man, very good, honest person that's, had a go out there and right now sits on a revenue of a business with £21 million, which is, like the 1% of the 1% of the 1% get to those sorts of revenues. It's very difficult, especially in this industry. And I've worked with lots of motor traders, very entrepreneurial sector for entrepreneurs to get into, I think, because you're forced to sell, and if you can sell stuff, you know, and you navigate through something that's slither thin margins. And let's talk about how slither thin those margins are, because last year he done 16 million of revenue and made £99,000 worth of profit. I mean, on 16 million, that's break even, maybe small loss territory, and he probably capitalising some stuff and doing some ad backs and whatever. That just ain't enough skin in the game to stay in the game. Then this year, 21 million and 1.5 million of net profit. So still way under 10% net profit even on this, because it's highly competitive, you know, warranties, big vehicles and engineers, big buildings, big buildings, engineers, new equipment, you know, it's business
all chunky,
rates,
isn't it? The cost, the team.
And he said he'd done 12 million of van sales last year. And usually what tends to happen in this industry is really you need to look at EBITDA, why EBITDA is so important here. And for new listeners is earnings before interest, tax, depreciation and amortization, because you might make £99,000 worth of net profit, but his EBITDA could have been 1.5 million because he's got a big credit line to buy all the vans, and he could be paying 100 grand in interest a month. But if he had his own money and he could use his own cash, he wouldn't be paying such chunky interest bills. And that's why you have to look at EBITDA sometimes in these business, because if you're servicing big loads of interest on a revolving stocking credit line, you actually could be spinning off loads of cash but just putting it into interest, which a lot of them do.
Would you be fearful of sectors like this where you're turning so much money and keeping so little?
Not fearful of it. I'll just be aware of it.
And bring in other stuff to mitigate?
Well, that's what when I was coaching him, we always wanted to, you know, build the business so that it had more strings to its bow. And I think that's been achieved now. It's just it's always funding these types. If you can use your own money, you become more profitable overnight. But if you've got 12 million of vans, and then next year you want to grow 20 million of vans, it's very hard for the individual entrepreneur to fund
another 8
stock.
million quid worth of stock.
And you know, to be clear, you know, you buy a van in for 20 grand. I'm guessing he's selling it for 22, 23, maybe not even as much as that. So that 20 grand needs funding, and you've got to sell a lot of 23, 24 grand to build up you to be able to use your own cash.
Absolutely.
So that's why and if you're entrepreneurial, you want to keep on growing the business. So you end up by hook or by crook using stocking finance, which is expensive.
Are there options around that?
Well, the options around that would be to be having a high net worth individual
who would sort of back you as a private backer.
Say, I'll put 10 million into this business, but I own 50% of it, and then you use your own cash. Or you are a high net worth individual and you use your own cash. Or you get to the business to a point, like an importing business, one of Teddy Tastic is very similar. If you keep on growing it, you never sit on your own cash because you're putting as much cash as you can back into stock. Because there's demand for your stock. And if you haven't got the stock, you don't
make the sales.
Exactly that. So you go, well, actually I'll be happy with a 15 million revenue business. And then over a 3, 4, 5 year period, if you can keep it at a steady level, 15, 16, 17 million, you then use your own cash.
Right.
But if you go, well, I'm 15 million, next year I want to be 25 million, problems will arise.
100%. So talking of challenges, we asked Leo a bit of information before we started recording. He's been going a little while. His estimated monthly revenue is now £1.7 million per month. Does he have team members? Yes. If so, how many? He has got 60 of them. 3 challenges: funding for acquisition. So I think he is on the building the empire via acquisition route right now, by the sounds of it. Challenge 2, training our Ukrainian operations director. And challenge 3, my challenge is thinking of a third challenge. I guess 1 is accepting that sometimes things do just take time and don't happen as quick as you like. Yeah, imagine you've got to deploy quite a lot of patience in this game.
And knowing Leo, because he is, like myself, I suppose, always hungry for more.
Yeah.
And so really funding, it's really bench rocks everything. But one of the difference with him, though, is he is prepared to take in partners, I think. He's prepared to have investors involved. That ain't my cup of tea, but he don't mind that. So, I mean, I think there would be a private equity venture capitalist person that would look at this and go, yeah, you've built this up. Yeah, we can give you another 20 million quid. Let's grow and grow, turn it into 100 million and then sell it in 5 years. That's probably where this conversation is going to go.
Is that something that you would do if you were in that space?
Absolutely not.
No.
I would not want those sorts of people involved with me.
You still think they're vulture capitalists? That was your tagline back in the day.
I think for some people it works out really well, and we've said this on the pod. Like, I'm sure Mark Zuckerberg is sitting there now going, "Yeah, getting private equity and venture capital people involved in Facebook was probably a good decision." And Jeff Bezos is probably saying the same, but it's not for me.
Yeah, fair enough. Should we get Leo on?
Let me tell you one of the things. NVIDIA that you hadn't heard of.
Yeah.
I listened to about Jensen Haag, who is just an amazing entrepreneur. Like, I think he's one of the most underrated entrepreneurs on the global landscape. He is like up there with Elon Musk, in my opinion. Like, he's so smart. And what he has done in his 25-year career with NVIDIA is like, it is blowing my mind, and I've only just sort of found out about him. Really go and check him out, gang. He owns 3% of NVIDIA now, and that's still worth $20 billion. It's the 8th most valuable company in the world, and you hadn't even heard of it.
I don't even know who you're talking about.
I think he will be raising up and will go up in the top 1 to 5.
He's the guy who turned around at a big conference and went, is it worth it? He went, no.
No, it's not. Yeah, really crazy.
Sat on top of his $20 billion hill.
Hey gang, James here. Great news. Business Masterclass is coming back to London. This is my ultimate 2-day event that will grow the profitability and size of your business so that you can have a commercially profitable enterprise that works without you in it. I've run this event before. People absolutely love it. We get rave reviews, and I'd love for you to come along. Imagine 400 business owners in a room serious about growing their business. Imagine the connections you can make. I'll be on stage teaching you all the stuff that I've learned over the last 20 years in 2 days to seriously scale your business up. If you want to find out how to buy companies, raise finance, get customers, and make your teams as profitable as possible, then this is the event for you. Look, it comes with my 100% money back guarantee. You come along to this event, and if at the end of day one you go, do you know what? I haven't got 10 times value out of what I've paid for this. I'll just give you your money back. And here's the great news. Tickets are only a few £100. And there's no sleazy sales on the day. It's just me delivering all the stuff that I know about growing businesses. And I can't wait to meet you. I'll be there. We'll have a little chat with the other 400 people in the room. It's big enough, but intimate enough to really learn the stuff that I know that scales businesses. Cannot wait to see you at Business Masterclass. Now, every year the tickets go like hotcakes, so make sure you get your ticket now. The tickets are £299 as we're making this video, but they grow in value depending on how late you leave it. So get your tickets now before the price goes up. And I'll see you at Business Masterclass to grow your business.
Right, should we talk about, should we get Leo on now?
Let's get him on.
Leo, how the devil are you, sir?
Hello. I'm very well, thank you.
Fantastic. Thank you for being on the pod. We are good, thank you, my friend. Could you, just for the sake of the listener, could you give us like a little summary of you in the business and where you've got it to in what timescales and all that kind of stuff, just so we've got some context to the conversation?
Yeah, sure. I'll give you a brief overview. So I started the business myself in 2010. I was 22 and I started as a one-man band as a mechanic fixing cars, basically. We started out fixing Vauxhalls called Vauxhallist. And then kind of grown from there. So 2014, we moved premises to a bigger premises, moved again in 2019, added in van rental, car sales. And now we also do van sales and we're a coach builder. So we sort of convert and build vans across 3 different premises we have in the business, and 60 staff, as you just mentioned. So that's a very quick overview of where I was to where I am.
What's your biggest stress? I mean, is it still cash flowing yet, or?
cash flow isn't as bad in the last kind of like probably 12 months, but it has been from 2010 to 2023. So I think that you kind of almost get used to dealing with that stress, and you just deal with. I always remember you saying stress is like when you in a new relationship and you have an argument with your girlfriend. It's really, really bad, and a little thing blows up. And when you've been together for 10 years plus, little things don't matter as much.
Yeah.
But biggest stress is probably I don't know really. Yeah, it's still cash flow is obviously a key thing that's always on your mind.
Is it because but from when you're growing like you're growing, like when businesses grow, like you've doubled your revenue in 36 months, haven't you?
Yeah, we doubled it every year for about 4 years on the go in the last 4 years.
And if you're not making massive margins, which like when you said 16 million, you've made 100k profit. It's not like you turned 16 million and made 10 million profit. So cash is always going back into stock and stuff, isn't it?
Yeah, and another thing is a lot of that is because we've got the van rental business. So that year was 16 million. The operating profit was around about sort of £500,000. So a lot of that's been eaten up. So we've got high EBITDA but quite a low net.
Yeah.
Is another problem.
Yeah. Was you listening in? I mean, I guessed as much when I done the intro, and I think it's really.
I lost the internet for about a minute whilst you was talking, to be fair, but I heard a little bit about stock interest and stuff.
So are you still using stocking finance?
No, we were when we did car sales, but we stopped car sales just over a year ago. And yes, we were using stock funding, and it allowed us to do what we were doing. But one good thing is that with the sort of bolt-on businesses like van rental and car sales, they haven't had to sort of pay me, and they haven't had to pay as many overheads if you was just doing just car sales or just van rental. So the other businesses have allowed to kind of let them nurture and build. But still, car sales, yeah, stop funding, putting warranties on them, cars going wrong. I think a lot of independent car sales places that are owner managed and owner run. I think trying to find someone to manage a smaller car sales operation is quite a hard thing to find.
So when with the vehicle rental business, you're buying in the vans, renting them out, for 6 months, and then selling them through your vehicle sales?
Yeah, so when we started van rental, we got the model all wrong. First sort of 3 years, we was holding vans too long. And when COVID hit, van sales business was about 3 and a bit years old. So we should have been starting to change the fleet, but we couldn't because there was no stock around. And we ended up having older vehicles with high mileage. But yeah, now we're kind of got the fleet a lot better, a lot tidier, and we sort of flip stuff when it's 1 or 2 years old, and we pull it into the van sales business, and then we retail out of it rather than trading out of it.
So you're getting lumps of cash coming in from van sales, every week?
Yeah, so when it comes off of van rental, they're two separate entities. A lot of our van rental is on hire purchase still. So yes, we're getting a cash in, but we're kind of paying off the finance. Yeah, there is like a lot of the problem with rental is most rental businesses, you don't make much money on the rental. It all comes on disposal of the asset.
Yeah.
And that's all been changing a bit at the minute as well because of the whole supply and demand situation. But
so if you buy in a van, just for listeners, if you buy in a van for £10,000, which I know wouldn't happen now, but just keeping the numbers round, or you buy in a van for 20 grand, is that roughly what you buy a van for?
Probably no, but looking now, probably an average price of like for a medium to large van, 28 to £30,000.
Is it really? Right, okay. I should know all this stuff, right? So you buy a van in for 30,000, then you rent it for a year.
Mm-hmm.
What do you aim to collect in rents for a year?
So if it's out of a long-term customer, a van that would cost you between £25,000 to £26,000, you're probably only be renting it out for about 150, 160 a week. There's not many costs against that other than your cost of finance, because it shouldn't need servicing in the first year, hopefully. Shouldn't really need any tyres, hopefully. So you need numbers, because you're probably going to make a couple of grand gross profit on a vehicle within a year. So the good thing is, if you get the business customers, it can be recurring revenue, because they'll have another van the following year. The problem in the last 6 months, the vans have gone up that much, interest rates have gone up that much, but the rental market price hasn't really gone up to correlate that yet. I think it will do soon, but that's been another little issue.
So just but on that, so you buy it in for 30,000, you rent it out for say $8,000 a year.
Yeah.
Then what would you sell it for after a year on a trade deal?
So it's a tricky question. Like, Volkswagen Transporter vans, you used to be able to buy them through rental terms, because part of the deal with buying stuff on rental terms is you can't sell it for a year. You have to hold it for a minimum of a year.
Yeah.
So transport van, you used to be able to buy them and sell them for probably the same money what you bought them for. So all your rental revenue was pure sort of profit, basically. And sometimes you would actually sell them for more than what you paid for them.
Yeah.
So it's all about getting the vehicles that depreciate well. So like some of your cheaper vans, like a Peugeot or a Citroen, might have higher depreciation. Whereas you spent a bit more on like a Ford Transit, you might have a low depreciation, but then your cost of borrowing is a bit higher because the capital outlay is higher. So that doesn't really answer your question, but we found that we was losing in depreciation around about 15% a year.
Yeah, I get that. So it's all volume, isn't it? It's not loads of money. If you're doing it 100 times in a year, then it's okay.
Yeah, we're still we're just working. Rental's a big project right now, and we're trying to just understand what the sweet spot is, because I think it's either you might be better off sticking with like 30 or 40 or 50 vans, or you need to be at 150 vans, and we're at about 110, 120 vans at the minute. And when we have got lots of plates spinning, there's always a department that gets put on the back foot a little bit, and that's been the rental department. So we're kind of on that right now, just to understand exactly what our sweet spot is, and do we focus on a few less vans and high utilization, or more vans at the same utilization?
If you owned all the vans, if you had £1 million just sitting there and you could own them all, and you didn't have the hire purchase, and you rent them out for a year and then sell them after a year, that's when you really make money, isn't it?
Oh yeah, well even I think last year or year before, we spent around about £200,000 just on interest alone. So that would obviously be straight into your bank account if you weren't.
So whilst you're not using stocking finance, you are using finance from the rental point of view, aren't you?
Yeah. But the thing is, well, you could argue that if you had the capital to buy £5 million of vans cash, you're probably better off putting into something else anyway. Potentially.
Is that the value of your stock that you've got at any one time, £5 million?
I think our rental fleet is around about 4 million in assets, I think, yeah.
And that's costing you 200 grand a year in interest to have the 4 million quid?
Roughly, yeah.
Yeah, maybe. You'd have to really sit down with the spreadsheet.
15% depreciation, is that on top of the 5% that it's costing you in finance? So the real sort of cost per year is like 20% of these vans?
Yeah, so your kind of cost would be, depreciation at say 15%, then your interest, then your maintenance, your sort of direct costs.
So you're renting them out for say 8, and your cost of renting them out is about 6, isn't it?
Like I say, you'd probably make a 2 and a bit grand gross profit, but then again, it all just depends when you do it. Even though you're depreciating it at that rate, when you dispose of it, you might actually have profit on there. So even though you depreciate at 15%, it might have actually in real life and depreciated like 7 or 8 or 9%. Gotcha. But you're better to over depreciate it than you are to under depreciate it and have a loss on disposal.
And then what obviously, we're talking in gross profits here. This is before you've paid for the yard to store them all in, the manager to look after them. And we are assuming that none of them ever go wrong. None of them ever get crashed. None of them ever have a broken window screen. None of them, someone doesn't puts petrol in it instead of diesel and all that good stuff that I'm sure you deal with. Okay, right. Well, that's a good.
But to be fair, again, that business, there's two people really in that department, so it's a smaller sort of thing that kind of like is ticking along in the background. But it could definitely benefit a little bit more focus. But yeah.
What's nice though for you, Leah, that anyone that just had a vehicle rental business where you've got the sales part where you can just put your own stock into the sales. It's a lovely little ecosystem, isn't it?
Yeah, and also it's the main benefit is for customers. So we've focused quite a lot in the last year and a half on local business customers, and someone with a van, we can service it, we can fix it, we can rent them a van while it's off the road, we can then sell them a new van if they need a new van. So we literally are a one-stop sort of shop for a local business, with a van fleet requirements.
And what about getting customers, like renting vehicles out and selling vans? Do you find that the easiest part because of, I don't know, the auto traders of the world? Is it getting customers not the issue, or is that always an issue as well?
Service department, it's not much of an issue. It's the service department business, like I said, I've been going since 2010, and the other businesses are still quite new. So I still class myself as like a new business because as you're growing, you're adding new things in and you're still learning about them all. But yeah, service is fine. Van rental, we only really do Google AdWords, SEO, and then there's a bit of word of mouth. So we don't do too much focus on that. But again,
let me ask you a different question, right? Just because what I'm trying to say is if you had unlimited funding, unlimited team, and then you had another 200 vans, would it be easy to get them all rented out?
No, I wouldn't say it'd be easy.
No. So the
next thing is we want someone to bit door knocking.
Yeah. So there is it's not just build it and they will come. You need to build it, tell them, and they will come.
I think the best way to grow it quicker would be acquiring another van rental business and then acquiring their database of customers.
Okay, right. So let's get into the challenges now. So challenge number one, funding for acquisition. So growth by acquisition is where Leo wants to go, is it?
Yeah, so as I mentioned before we came on, we're about to complete on one, hopefully this week. We've got another service centre in heads of terms. And right now, there's definitely a lot of opportunity of businesses. And these are service and repair businesses. So kind of think like a 4 or 5 ramp site, just doing service and MOTs and repairs. There's definitely a lot of opportunity at the minute to expand and acquire those businesses.
And why do you want to grow them? Because growing organically is just too long and too tough.
Yeah, I think one of the main reasons is how you can structure the deals. As you'll note, the one we're getting at the minute, it's technically a £1.4 million purchase, which we're paying just over £200,000 up front. So how we can structure it, and then you're using the deferred payments is kind of like interest free.
Yeah.
So that works really, really well versus going and getting a new site, high purchasing the equipment, cash flow in the first 12 months.
Yeah.
Yeah, you could easily spend 200 grand there in a loss. You're going to enter day one pretty much making kind of profit when you're acquiring. And my goal with so we have another site in Coventry, which we've just changed to a high Q franchise. And my goal is to kind of build a handful of these service centres and then sell them in 5 years' time. Because building a service centre business, which is kind of like your easy repairs, your servicing your tyres, your brakes, is much more easier than replicating what we have at our main site in Lincoln, which is a specialist site where we do full diagnostics for many brands. We have all the dealer equipment for all the brands. We do engine repairs and so on. But trying to scale that is almost impossible because you're so reliant on that really strong team.
Got it. So if you've said, yes, you can do some of this, vendor finance, seller finance, you can do all that sort of stuff. But sometimes you want to do a big deal, you need the bank to help, don't you? Or, you want to have a slush fund.
Yeah, so even this one that we're acquiring now, so we've got the cash of like £200,000, probably more towards £300,000 to put into that business. But then until we can get that money back out again, that stumps us because that's our only kind of free cash that we've got. And we could be minimum 6 months, more likely a year before we can probably pull that back out again by borrowing against that business and then go and utilise it again. So I think acquiring like with your own cash, say 3 or 4 sites might take 2 years versus if you was backed. So you could probably do it much quicker if the goal is to exit out of it in sort of 5 years' time. And then we'll still keep our site at Lincoln doing what that does, and that will keep going through all the, you know, the changes of electric vehicles and so on and so on there.
So why don't you do that? Don't know who to go to. Well, why don't you go and get, you know, if you're happy to get investors in, why don't you do that? Because I think for a bank will look at you and go, well, last year you made £100,000, this year 1.5 million. That's way too sorry for us.
Yeah.
But investors get it, you know, and they will get where you want to go. So why not go and talk to them?
Yeah, I guess I think we've just changed, like I say, I think we probably need to, our common site's just changed to high Q sites. We need to let that settle down. I think we need to acquire 1 more or 2 more ourselves to prove the model, and then we could probably go and say, like, we've done this is what we've returned.
But here's the thing, Leo. I allow for 1.5 years to get venture capital, private equity finance into your business. So carry on doing all those things, but if you want it in 2 years' time, the time to get that going is now. Yeah. Because if you then go, right, we're ready to do that in 2 years' time, it's really like you're going to be waiting for 4 years before it actually happens.
Right, yeah, okay. So sort of start thinking about now.
Well, and you know, you need to go to an accountancy firm. You know, I can recommend some, not that just specialise in this sort of space, in M&A space, and they will go out into the marketplace and they will, you know, they'll charge you for it, and they'll charge you handsomely, you know, maybe $100,000, and they will take your business and they will put it into a brochure document, and they'll go to all the big banks, some of the banks that you won't even heard of. They'll put it to them, and they'll put it to, say, 30, 40 private equity companies that they'll know, and the private equity companies will look at it and the banks will look at it because those accountants have prepared the pitch deck, investor deck, if you like, and then they will only get paid that $100,000 on results of you being funded.
So that's more of a specialist accounting firm that do that rather than like a broker or a
not a broker. Sort of, I mean, yeah, look, your business broker, if you want £500,000, £1 million, but you really need like 10 million quid, don't you, to plan where you're going to be in the next 5 years. So you need to go to one of those specialist accountants, and I'm not going to, there'll be one of the top 10 accountants. There'll be a Grant Thornton, a PwC, a Deloitte. It will be one of those, but you need the right department. And I know some of those people in those departments, and I'll intro you. And I would, because you're not really, what you want to do is you want to get it wouldn't be for me, but I think it is for you, and I think you're okay to do it. They will come in and they go, right, we'll buy 40% of this business. You'll still be a majority shareholder. We're building this to sell in 5 years' time, and you know, you maybe take £1 million off the table for your own personal family, so you have £1 million, and then they will put in 5, 7, 10 million in committed capital to go and do acquisitions and grow. And then, you might then go, well, actually, let's not do seller finance, because let's keep more of our cash flow ourselves. Because the thing is with vendor and seller finance, something that I have done many, many times over my career, it does cause you cash flow problems because you've got to pay it aggressively back over 2 or 3 years.
Yeah. And that's the thing. People always talk about these sort of no money down things, but there is money from somewhere, and when you're debt borrowing, you've got to be careful. I hear people that they'll straight away do invoice factor financing and this, that, and the other, and all of a sudden you're just eating up all that cash flow from sort of day one.
Yeah, and that's the great thing about private equity and VC money is they're rolling it all up, and then you pay it at the end at the sale. So your cash flow isn't affected. Now they charge handsomely for it. You know, they'll be rolling it up at really juicy interest rates. But not just that, they will give you incredibly intelligent, and I've met lots of them. You know, these are intelligent people that, you know, they're all proper accountants, finance people that are very well connected. But they'll work you, you know, they will work you, and they will push you, and they will drive profitability. They will question your decision making. They will make you maybe do more than you want to do. You know, they'll go, right, let's grow faster, and then they might put the brakes on.
I guess would one of the issues there be that I've got other interests with other sort of departments of the business? Would it be a stipulation that if we're doing this, you're all in with this one?
Yeah, I think they would want I mean, I don't know, you'd have to negotiate that, but you'd probably want to put it all in. But remember, you got to make a decision. Like, if someone's going to put 5 to 10 million into your business, you probably want to put the whole lot in, because the more you put in, when you sell in 5 years time, that multiple is going to be so much more.
Yeah.
And you completely de-risk yourself. The personal guarantees go away. Maybe you take 2 million off the table on completion, and then you can go and put 2 million into some commercial property, so that you've got some personal family wealth, sorted.
Yeah. Definitely sounds like, part of me thinks that would be more fun, because you're literally just focusing on the growth and the profitability without having the kind of, we can't do that this month or buy that this month because of the cash flow side
and
of things.
Expertise.
And
these people
with it as well,
are smart. And they will be rolling up all their interest and getting that all back at the end of year 5. But they will sell it for a much bigger multiple, probably to a bigger private equity company, and know how to do all that process. Much smarter than you, Leo, and much smarter than me, because that is what they do week in, week out. Buy companies and get them ready to sell.
It's a good business model. We've seen it through COVID and recessions and things, that it is a strong kind of business to be in. So that ticks a few boxes for the investors, isn't it? So
I think the homework on I don't think you'll ever have enough money with your because you are ambitious, and I don't know lots of the guests that come on, Jay, but we don't know them intimately and haven't met them more than once, and this is the only conversation.
Yeah.
I don't think you'll ever have enough money through seller finance, vendor finance for the things that you want to do, Leo.
Yeah. Yes. Okay, hit me up then with some.
Well, that'll
VCs.
be. Well, I won't be. No, I'm going to hit you up with an accountant that will do all the introducing. It'll be one of the top 10, I think that's, you need a real good specialist M&A accountant that can, work out your business, to spend a lot of time with you, put it all into a slide deck, and then go pitch you, and then you just carry on running the business.
Yeah.
Okay, number 2, training our Ukrainian operations director. That's interesting. What are you thinking, Joe?
Yeah, not necessarily challenge, to be fair. I was just struggling to think what to put as the 3 challenges, because some of them mixed in with the questions further down, but more of an interesting story than anything. But so we took on an operations director from Ukraine recently. He's doing really well so far. He's really invested and committed. So it's just a case of time for him to learn everything that we're doing and understand it thoroughly.
Well, it sounds like you've solved that one then.
Yeah, to be fair, it was the challenge, I guess, is the challenge is actually that I find is whenever you bring in a new senior position or a senior manager or any sort of manager, integrating them into the actual business in its own right is always a challenge, especially if it's a new position that hasn't been there before.
Here's the thing.
You see that, have that
yeah.
before,
If they're really good and they are effective and they're great people, eventually they win the day, just because people look at them and go, bloody hell. Like, if you're running with
definitely.
Mo Farah or whatever his name, and he's like the new kid on the block and he wins the race, and he does it 10 times in a row, all the others run again. Well, I think we should stop taking the piss out of this bloke now, because he seems to be really good at this. And what can we learn from him? And that's the real test of leadership. Like, if they come in and they are amazing and they work hard and they're fair and they're reasonable, eventually they just win the day. Like a great teacher, like all the kids, like if the teacher's really good, fair and reasonable, inspiring, the kids all fall in line, don't they?
Yeah.
Your challenge, Mr. Dak, Mr. Leo Dak, is making sure you've chosen the right one.
Yeah, and also it comes back to the time thing as well. I think sometimes you put these roles in and you want to the next day just kind of go, right, there you go, there's just see you later. But you've got to make sure you put your time into them as
Absolutely,
well.
Yeah.
Even though they
You're
are
the
a senior
coach.
position. Yeah. And that's something that I definitely do lacking, is kind of coaching coaching people or mentoring people around me. So
You had some questions that you wanted to ask Jim, and I've got a list of them here, Leo. And I'm going to pick a couple of them because I think it'll feed in. Some have obviously already been answered, but I think some will feed in really nicely.
Some, haven't we? Yeah.
One in particular I thought was really interesting, and this is something that you talk about a lot, Jim. Build to sell is often mentioned, but what does this actually look like? Is it as simple as having a management team in place, or what would be your core 5 things or a few things to focus on if you are building something to sell?
Oh, that's a really good question. Yeah. I mean, look, if you want to sell a business and get a lot of value for it, you cannot be key man. The management team is the absolute golden goose in terms of getting maximum valuation. So you've got to build a commercially profitable enterprise that works without you in it. If you do that and Leo is no longer needed, it becomes an investment, not a business. And that is why people invest in Google. That is why people invest in Disney or Costco or whatever, these great companies with great management. So if you've got a great management team, then predictability of cash flow, is this a business that's going to be continually around? Margins and profitability is next. What are the assets of the business? Good IP, good brand, good property assets. Has it got proprietary software? All of those things. If you can list all of that, and also potential growth that the incumbent owner doesn't want to take that to the next level because they can't fund it, or they're getting to retirement age and they don't want to set the business up Mark II in Ireland or Mark II in France, but that it's documented that if you do all these things and you have the cash to do these things, you will get a much better return.
But you believe the management team is the pinnacle of the pyramid?
Start with management team, yeah. Because otherwise they're going to want to hold you in, and you are the management team.
Gotcha.
So businesses that get even, when you hear these wacky valuations of software companies that are not even revenue based yet.
Yeah.
Companies are paying big money for them. Based on the talent that are running those organizations. And that is a story that has been told many, 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 many times. Amazon and Facebook and YouTube. Google have bought loads of software companies that for billions pre-revenue or hugely loss-making, but they've bought into the team and the idea and the assets.
Yeah.
The team, like who are the people that are going to run the bloody thing?
Second question that sort of like feeds in sort of to this around Leo's question was mentors. For some reason, I feel like I'd like an American mentor. That's random. Please, people always mention mentors. Graham Weaver, who I love listening to, swears by his mentor. How do you find one that you could be confident will be able to assist you, and will they definitely make a difference? Why do you want an American mentor?
Yeah, why, Leo? I'm trying to...
Because they're optimistic. And they everyone's always they're like happy, clappy, and that's their optimistic basically.
Yeah.
Were you burnt by your previous mentors' general bad demeanour on a day-to-day basis? Is that what you're telling us, Lee?
That's it.
But they wouldn't understand the intrinsic workings of a UK vehicle company necessarily. Is it literally just the optimism you want for them?
That's it. Yeah, that's it. I like how they roll, but
you can get rid of
I'm telling you now.
Watch Tony Robbins DVD.
Yeah. There's 360 million people live in America. I don't think all of them are happy clappy. I've met plenty of them. They're not all like that. But look, I think when you go through that process of bringing in big investors and mentors, that is one of the things that you will absolutely get. You will get people that are your support blanket.
Force it on you, won't they?
Yeah, quite. They will say, the profitability has to grow, and you'll be like, I'm not so sure about this, and that they will have a contract in place that will make you do what needs to be done.
And you weren't going down that route though, when you just wanted a mentor, kind of I've always thought where do you kind of look, and is it, because I've always said you should look at people that have achieved what you're trying to do, so look upwards, but a lot of kind of coaches and mentors, they run either a business that just does coaching and mentors, and then it's hard.
Well, I think there's two different things here. A coach and a mentor are two very different things. A coach is someone that's going to make you do what you say you're going to do, and is your counsellor and all that. A mentor is someone, in my mind, that's 65, they've exited, they're doing non-exec roles, and they've done it before, and they would tell you how they've done it and why you should do it. And do you know what? I think having mentors because you don't really need a coach, Leo. I think you're going, no one needs to tell you what to do. You're not lazy, are you? I've got a PT coach because I don't want to exercise, so I have him to make sure that I do the exercise. But I don't need a coach to tell me to go and do some stuff in entrepreneurship in business. Quite the opposite, really. I need someone to say, well, I think you're doing too much, sunshine. But mentors, people that have been there, done it, and got that metaphorical T-shirt, I think are very good medicine for most people, whether you're doing sport.
Is it important to try and find a mentor that's in your sort of industry, or where?
If I was in your business, I would be absolutely finding someone that had a £50 million van sale business that sold it for 10 million, and you go and talk to them.
Former chief exec at Reg Vardy or one of those sorts of firms.
Absolutely, yeah. And why have one? Like, maybe you got a paid for one that you go and see quite regularly, but I would have 10 or 12 that you build great relationships with. And I have that in my life, for people that own zoos, people that own farm parks, people that do importing, that even just close friends, that are, even at the same level as me, and we mentor each other. And I think those masterminds of people that are in it are very, very good things for business owners to do.
That reminded me then as well, when you mentioned about the coaching thing, and sometimes the opposite, someone's hold you back. Another question was, how do you control your optimism versus being delusional? And sometimes do you feel like...
Well, I think a mentor would do that. That's right. But the thing is, Leah, the more I think about you, having a private equity, a good partner, they will sort all that out.
Yeah.
And I worry, when you go through the notes, I want to do 3 acquisitions this year. I think, Christ, you'll always be tempted to use your cash flow to do it, and you'll always find a way. But do you want to always find a way, and you get to 50 years old, and then you've built this massive thing, and you still haven't really paid yourself for the efforts that you put in, and maybe having someone with big money behind you could get you to where you want to get to in 5 years.
Yeah.
Because I think, you put in your notes that you want to sell, you want to sell the thing. Like, why wait 2 years to start looking for those people? Let's do it now, and at least start having the conversations and knowledge up now.
And I think now, like I say, there's a lot of people at that age that they want to retire and sell their sort of business. And even though they might not have much of a business because they're like owner operators, they're easy to kind of put, replacement people in and build that into a larger kind of group of garages, basically. So
yeah, and sometimes here's the other thing: is like, you bought that business for 1.4 million, whatever it is that you've just done, 200 grand, paid the rest of the blah blah blah. That all sounds lovely, but what if you've got a big venture capitalist buyer and you say, well, look, I'll give you 650 grand today for it, and they probably say no, and they say, well, look, my offer stands here. If you don't sell it, come back to me in 3 months' time. If you do enough of those, people will have had enough and they will ring you up. And actually, that does save a lot of money. It means you don't have to cash flow all these heavy loan repayments. And again, you'll have a partner that's put in the money, that knows how to do this, that will help you build the business up and get it ready for sale to get the big payday. They'll start. Here's the thing: like, if you speak to private equity, so they buy the business, they put the money in. At year 3, they start the grooming process, the selling process, to be out in year 5. Because it takes 2 years. I'm telling you, anyone that is listening to this, if you want to sell your business and you want to sell it for a good money, allow yourself 2 years. If you get it done in a year, you are going at speed. But even I bank with a private bank. They've surveyed all their clients. When they sell a business, on average, it takes 18 months.
Yeah. And it's true that, you definitely, whilst you've got deferred payments that are interest-free, you're paying a premium in some way for that, because if you went in with the cash, you'd always get a better deal.
Absolutely. But it's a means to an end, and do you know what? I think sometimes doing those seller finance, vendor finance, getting stuff over the line, I think all entrepreneurs that are successful have done some of that. And once you've done it, you've gone through those tough 3 or 4 years, clearing it down at the end of it, you think, wow, it's good, I've done it.
Yeah, and that's it. Within, the other side of it is you could just stick to 2 or 3 acquisitions, which I could afford to do, and then in 4 or 5 years' time, earning a nice amount of money out of
but
that.
Even what you're doing here, though, you're clearing yourself out. You're exhausting your free cash flow to do this next acquisition, aren't you?
Yeah.
So you could have a tough month, maybe something goes wrong, a bit of machinery breaks, or, I don't know, a bad trading month, and then your reserve's gone and you're going to have to be very entrepreneurial to get through. You will always get through, Leo, because you've been in it now for, over a decade. You know what you're doing, and you'll magic the cash out somewhere because you're a true entrepreneur. But, there comes a point where you probably want to do things bigger, faster, and getting a big money thing behind you. And I think with the revenues you're doing and the infrastructure you've got, there will be someone that will look at this and go, let's go.
And I guess the other thing with doing that is you're going to become a different person yourself. You're going to have a speed of learning very quicker than doing it yourself for the next 5 or 10 years. Yeah,
and also I think sometimes you won't be able to just go and do things. You will have to ask their permission, and that might be good medicine for you. Frustrating it will be. But then, and 5 years, could you imagine? So how old are you now, Leo?
37.
Yeah, so like by the time you're 42, you could have a 20 million quid in the bank. Be all right, wouldn't it?
Let's do it. Let's book a podcast in for 5 years' time.
There
See how it all went.
You might even be faster. You might, do it in 3 or 4 years.
Yeah.
Good stuff. Okay. Anything else you'd like to ask?
No, I think did we cover all the other questions? I think we did, didn't we? The 5 questions.
Yeah, there was a few bits about workload and all that stuff, but again, watch a Tony Robbins video, you'll be all right.
Yeah, I'm always happy. Yeah. The thing is that, Leo, you just go do, don't you? I don't think you need a happy clappy person to go, come on, Leo, go more, do more. You're so amazing, Leo.
Yeah. You've done is,
you need someone that goes,
been there, done it.
Yeah, exactly that.
Yeah, mentor definitely I think would be a good person to try and find that right one, I guess. So find a one.
Yeah,
I think it's going to be quite an uncomfortable journey, but I think you've got to sit in that discomfort for a bit. I think going, steadily doing it via cash flow is probably whilst for a lot of people listening to this go, bloody hell, he's really going for it. I think you've got the ability to do that, but I think you're going to have to throw some fuel on the fire here. It's not often that the medicine prescribed is go and get a VC partner. Especially from.
It would be fair, it doesn't make me feel uncomfortable going to do it.
The reason I don't. is because you told me you want to sell it. You put in I want to sell this thing.
What does it look like when it's finished? Sold.
Yeah. So you've clearly told me that. So you've put the headline, and the content of the headline is, well, we need money then, don't we? And. You're doing all this. It's not like you done 15 million last year and you made $1 million, and you done 17 million this year and you made 1.2, and then and it's clearly predictable. Last year you did 16 million turnover, you made $100,000. This year 21 million, you've made 1.5. I know a bank will look at that and go, well, there might be a bank that go out there and back Leo and look at Leo and all that, but then you'll all of a sudden another juicy opportunity will come up and you'll just want to do it, and the bank can go, well, hang on a sec, we just lent you a load of money to do this. God, steady Eddie for 3 years. That's how they work, and I know him. Man, you've also taken on investors in a small scale before, haven't you?
Yeah, it was a director's loan rather than an investment as such, but yeah,
but you've got over that emotional. Get other people involved, which I would hate.
Yeah, definitely, and I think that is a thing. I think it is an emotional thing, that is more than anything, isn't it? So that's why it's important to have like goals, what you're actually aiming for.
Yeah,
what you actually want.
If you want to get out in 3, 4, 5 years' time, and someone gives you 20 million quid or 10 million quid or 7 million quid and accelerates the journey, and look, with that sort of money, you could sell £100 million business that's making 10 million of EBITDA or 7 million of EBITDA, and you get a 10 times multiple, that's 70 million. They get 40 million with all their rolled up interest, and Leo walks away with 30 million. I mean, that ain't a bad day out.
No, cool.
I mean, it's all hypothetical. You haven't actually done it, but that's
yet.
That's the
come on.
The story.
Tony Robbins him.
Now, we are going to rate you, Leo. Have you listened to the podcast before?
I haven't listened to any for a couple of weeks, but I've listened to a few, yeah.
Well, do you know at the end now we rate our guests when we can remember, which we're getting much better at doing.
No, I didn't know that. That's new to me.
Should we let him listen in, or should we do it?
Do you want to stick around for this, Leo?
Yeah, I'll stick around.
Then you can fight your case, okay?
Yeah.
So this is our favourite bit of the show. This is the new feature, which is called 8 Traits of the Greats. It's where we look at entrepreneurs and we rate them on whether they're great in 8. Well, we haven't done this for a couple of weeks, have we? Right, you got your notebook, Jimbo Sinclair?
Yeah.
I don't think we've had any other automotive businesses so far. I'm just looking up the winners chart so far. No. Garage doors. We did garage doors once. Got a little 2.5 for that, but no.
You had somebody with car sales on before.
Yeah, pre-JB.
Pre-me, it's when the podcast was rubbish. No one remembers. No one remembers those days.
He comes in. I've done 300 episodes on my own. And he comes in now, steals all the glory.
I launched it
you can barely class it as a podcast, can you?
Yeah. Right, 8 traits of the great entrepreneurs. Come on then, JB. What's number 1?
Number 1 is start with the end in mind. Does he start with the end in mind? He definitely does.
Yeah, I think we'll give you a point for that because he wants to sell.
He's having that. Go on, number 2.
Passionate about their cause.
Oh, he's definitely passionate.
Yeah, we're giving you that.
We're giving him that as well. He's
number 3, he's definitely got untold amounts of resilience.
He's romping through, guys. 3 questions and
someone
3
that
points
can raise money like you and get deals. Yeah, they master relationships with people. I think you do that.
I think he's a lovely fella.
Yeah. Number 5, commercial awareness. I think you have got commercial. He's got better at that. Yeah.
Loads. I don't know before, but
number 6, they innovate so they don't evaporate. Which he's innovating non-stop. Yeah.
This could be an absolute flawless result here.
Number 7, they're master marketeers.
Oh, I don't know that.
I actually don't know. Where would you put yourself at marketing out of 1 to 10?
I think I do. Yeah, definitely a point there. I love marketing. It's one of the things.
Do you want the bloody show as well, sunshine?
So I'm having a look at the web.
Welcome back to Leo Dack's business broadcast.
No, it is good. I'm having a look. It is good.
All right,
Dack Vans, Dack Motor Group, Dack Van Hire. He's dacking all over the gaff. He can have it. He can have it as far as I'm concerned. Master marketeer.
Number 8 he definitely has as well. This is
Teachable and curious. Guys, I can't believe it. Let's play the jingle again. We've never...
Leo Dack has got 8 out of 8. We have put him as a great entrepreneur. Go and check him out on...
He's won nothing apart from a round of applause. There's only one person who's joining in.
Have you got my address for the prizes?
Yeah, we don't need it because there is no prize. Your prize is pride only.
I think we should put in a prize because no one's ever won it.
Okay,
we'll send them a plaque. We will send you a plaque.
Trophy or something.
No, yeah, we'll send you a plaque.
We'll print it ourselves. Ticket.
Yeah, Tony Robbins
not
ticket.
Not for the expensive one, just for those ones where they sell from stage all day. We'll just send it to one of them events.
Yeah. Cost you money. No, we will. Can we organise that? Can maybe Sharabi Doos or someone can remember?
Can you send him a balloon with an 8 in it?
Yeah, I'm going to send him an actual plaque because I think it's going to be very rare. We will give him like a YouTube gold plaque. We're going to do you.
Wow.
You can put it up in your office because it's so rare.
You could say you're an award-winning entrepreneur then. Loads of people do that sort of nonsense, don't they?
It's more social media content, you see, from my marketing skills.
There you go. He's had 9 out of 8.
No, but seriously, JB, no one's ever won.
No. Closest we've ever got, David from AdLab, who got up to 6.
Yeah.
He's 2 better.
That's good.
A lot of people have been on the show. I mean, I would say the average is 4, isn't it? 4 or 5?
Yeah, 3.5, 4. Yeah. You've done very well there, Leo. I mean, of all of the accomplishments you've got, this very successful business, now you've also been given 8 out of 8 on a podcast that, you haven't listened to. You said in a couple of weeks. Clearly, if you haven't heard the 8 Traits of the Greats, it's been a few months.
Yeah.
So there you go. Well done, you.
So if you want to check out Leo on Instagram, he's Leo at 8 Traits of Greats. So he changed it. He's so proud. It was annoying. He didn't even know we'd done this grading. So all of our other shows, the first person that's got it and he's unaware of just what he's won. Should we dock him a point for not listening?
Yeah. Just for ego. He got 7 out of 8 now. Sod you. You're not having a plaque on nothing.
Well done, Leo. And highly deserved. Not many people take the risks that you take as well. It's amazing. Thank you very much for being on.
dackmotorgroup.co.uk. That's where you can go and find
Thanks so much, guys.
Awesome stuff. Thank you for being on, mate. Brilliant. Well, there you go.
I'm annoyed that we've actually given someone 8 out of 8. I thought it was never going to happen.
He deserves it, though, didn't he?
No, he does deserve it.
He does deserve it. I think it's... We have to make it harder.
For a special episode at the theatre show, we should rate each other.
Sure, yeah, but you've come up with the traits, so surely you must score very highly.
JB,
I don't think I would do very well. I think if there was like a banter one, we'll have to add a few more in here.
Yeah. Well, you make your own 8 up.
Yeah, I'm going to make my own 8 up. I'm going to cover my own to the theatre show.
Dear.
Yeah, I think I'll do it. I'd get a solid 2, I reckon. I'd get a solid 25%, if nothing else.
We'll give you number 7, Master Marketeer. You're a very good marketeer.
Yeah, I don't do a lot of marketing. All the work just comes to me.
Just look at him over here.
I mean, I'm no Leo Dack, but, pretty...
Nothing you're...
We're not doing this now. Not after an 8 out of 8. I'll come back when someone's been rubbish. Don't mug me off in front of our friend Sinclair.
Yep, okay. We'll do the theatre show.
Yeah, in front of 400 people.
By the time this goes out, I think we've done the theatre show, haven't we?
Yeah, I think we have. Yeah, and if you're going, I'd love to go to that. Too late. You missed out.
Too late. We're going to be doing another one, so keep an eye on the website, jamessinclair.net. We'd love to see you at one of our seminars as well. JB will be joining me at Business Masterclass, which is our big 2-day event in London. So if you want to come see JB do a keynote about how he's not one of the 8 traits of the greats. And what are you going to do a keynote on? Have you actually worked it out yet?
I don't know.
Oh, thanks for the professionalism that you're giving me towards
how to explode your podcast or content or something like that.
Okay, there we go. Look at the professionalism coming out of these
But there's other
airwaves.
good stuff. That I think that is the best 2 days. That businesses who are serious about
growing your business.
Growing their business to be a profitable enterprise that works right you with it. If you're at that point.
Someone put on LinkedIn, we put an advert about Business Masterclass on my LinkedIn and went, this would be a great event for startups.
Oh, no.
I commented, I went, it really would not. Thank you very much. It's no, if you are in business and you want to grow the profitability and take it to the next level, and you're very ambitious, then Business Masterclass is for you. Tickets are only a few £100 and you can buy them on my website, jamessinclair.net. Some of the other things, JB, about Entrepreneurs University, loads of people are signing up to Entrepreneurs University. I think it's you that
Are they?
I think it's you when you've done that sort of little speech
Hardcore
about how
pitch.
go it is. Yeah. Thanks so much for...
But it is good.
Thank you, yeah.
It's good. Leo Dack's been a recipient of that sort of information. Look at him go now.
Absolutely, yeah.
I mean, I'm not saying it's entirely down to that, but he's just scored 8 out of 8 and he's got a 20 million quid company and he's knocked about with Sinclair. So you guys work it out.
Sinclair.
You guys work it out. Don't take a
There you go.
genius. There you go.
But you spend a lot of time with me and I've not done very well there, have I?
I know. You can't polish a turd, but you can cover it in glitter.
There we go, sunshine. Thanks for listening. Make sure if you are watching on YouTube that you subscribe to the channel, like, and all those good things. And we love reading the comments. Let us know what you think about the show in the comments on YouTube. And we'll see you in the next one. Bye-bye. Thanks for watching today, gang. I hope you enjoyed the show. Now, look, we're looking for some great businesses to come on the podcast. If you've got challenges, but you're desperate to grow your business and you can't necessarily work out how to do it on your own, you'll be a perfect candidate to come here on the podcast. It's absolutely free to come on the show. Go to my website, jamessinclair.net, and there's a podcast button. Click on the podcast button, fill in the application form, and we'll do our very best to get you on the show and try and grow your business. If you're loving the podcast, make sure you subscribe to the channel by clicking here. And why not give this one a watch? I think you'll like it.